Hello.
This meeting is being recorded.
Hello.
Hello. Hi, Sylvia. Can you hear me?
Yes, there's an echo on my side.
Ah,
I don't know where that's coming from.
okay. Um, Let me mute you and see if it still does that. Hold on.
Okay.
Is it still echoing? Just do thumbs up or thumbs down when you talk.
Yeah, so still an
Is it?
echo.
It is okay.
I don't know where that's from.
Okay. Actually, talk again. I'm just making sure it's not my mic. It shouldn't be, but let me check.
Okay. Do you have
Do
like
you have like? Yeah, it's not on my side, but
okay, let me check.
okay.
Let me check on my sound settings. Setting. Anyway, have in a minute.
I'm sorry, what's that?
How have you been?
Good. Not busy. Very busy. Markets are keeping me very busy, but surviving. So all is well.
Yeah. Good to see
Good to
you.
see you. Yeah, you too. Hope everything's well.
Everything is
Everything is.
it's just
It's
that
just that
business partner
okay.
coming in from Cyprus,
Cyprus,
and then
the
Iran,
Iran,
Israel,
Israel,
they hit a
they hit a missiles
in
in
his
a
country. He
country.
had to delay his stay. So he left
But right.
end of
End
March,
of March,
April.
April.
So
There's okay.
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 So
So let me give
some time to
some time to
because we're
because
early.
we're early.
Let me see
Let
if
me see if
co-host is
co-host is okay. No problem. Yeah, I'll just start like it was an intro here, and then I'll have to get off camera and go share my screen somewhere else, just so you know.
yeah.
Yeah, let me give
Share screen.
share screen. Okay.
Check if you can.
Check if you can. Okay. Let me see.
Let me see if I have trading bar
Trading bar
somewhere on my should have it.
should have.
Okay.
Okay.
Yeah, I have
Yeah,
it.
I have it.
All right, let me
All
be.
right, let me be.
Yeah,
Okay.
let me.
Let me.
All
All
right.
right.
Thank you, guys.
Thank you, guys.
You will
You
join
will
us.
join
With me
with
is
me,
my friend,
my friend,
Carley Garner.
Carley Garner.
She's
She's
an
she's
experienced
an
commodity broker with
with
Decali.com, a division of Zengo in Las
in
Vegas.
Las Vegas.
Nevada. The
She's the
author higher
higher
commodity trading and
and a trader
book on
book.
commodity. She has
She has become
institution in history and has been quoted in the likes of Street Journal. Oh my goodness. And Investors Daily. She writes a column for stocks and commodity. And her market is frequently shared on CNBC, Mad Money, Kramer, and on Bloomberg TV. Okay, Carley, in a minute to you, maybe you can talk a little bit more about looking at recent trade.
Right. So I'm having a little bit of a hard time hearing you just because of the cutout, but I'll do my best. So as you mentioned, I'm a futures and options broker. We provide our clients with analysis. I know your audience is probably not interested in option trading strategies and things like that. Probably more focus on the charts and what we see in upcoming the next, let's say, weeks or months in gold, silver, crude oil. So we're going to focus on those things. I'm going to show you a couple charts of Bitcoin versus stock market. And you can see how the correlation there is working, which is telling me, and maybe the chart's not accurate, but at this time, it's telling me that there's some risk in the equity markets that a lot of people are kind of not counting on, especially the last couple of days. The stock market in the U.S. has been going much higher, and I think there might be some buyer's remorse around the corner. We'll have to wait and see how that goes. But we do, in addition to our brokerage service, we do actually now offer a Substack subscription. So for those that are in areas that are unable or to open brokerage accounts with us, we offer our analysis on a subscription basis. It's decarleytrading.substack.com if anybody's interested. When we go to share my screen and charts and stuff, I'll include a barcode, QR code for that. So
right, and you also have up. You also have a.
I'm sorry, a what?
You also have trading app.
An app. Yeah. Yes. Okay. We do. We have DeCarley Trading has a mobile app. Now the mobile app can be used for our brokerage clients to access their brokerage account, but it's also an informational app. So even if you don't have a trading account with us, the app might be useful to you. The app includes like a lot of podcast feeds, news feeds, those sorts of things on commodities. And there is also a section that has our internal content. Our internal content is only available via subscription or for our clients, but there's so much more information in the DeCarley Trading app. You may not even, you might still like to use it, even if you're not a client or a subscriber of ours. So the DeCarley Trading app, yes, we do have a mobile app for you.
All right. Maybe now dive right into this. We can go most recent.
Okay, so I'm going to go ahead and share my screen. I'm going to switch over to my other computer.
All right.
Okay, perfect. All right, so everybody should see a chart of crude oil. Is that accurate?
Yes.
Okay, perfect. All right. So obviously crude oil is getting a lot of attention lately, for good reason. With the war in Iran and Straits of Hormuz drama, there's been a lot of volatility. I would venture to say that the vast majority of analysts are bullish. We are not necessarily bullish. In fact, we're not bullish. We're very bearish. I actually think, I'll show you a chart in a minute here, but I actually think crude oil has a chance to go much, much lower. Maybe even 30s, somewhere, 15, 20, 30. So, but it's not going to happen right away. It's going to take some time. And in the meantime, In the meantime, we could actually see a very big short squeeze that pushes us up to 120 again. We were just there. We've been there twice already on this during this fiasco. I think we have a chance at seeing 120 again in the short run. And I also think that it might even go a little bit higher. So let me explain myself. Let's start with going to a longer term chart. I think I've probably showed this chart to your viewers before, your team. This is a very, very long term look, and obviously we just keep adding bars to it and changing the structure. I know there's a lot of things going on here, but the basic premise of this chart is to take a step back so we can see exactly where crude oil is. So if we read all the headlines, the premise is crude oil can only go up because of all these things going on in the Strait of Hormuz, the supply disruptions, so on and so forth. But the reality is we came into this situation with a very big supply glut. And while the Strait of Hormuz is a problem where 20 million barrels a day go through the Strait of Hormuz, but roughly half of that has already been rerouted and redirected to the market. So the shortage is probably 10 million or less, which is big. I'm not trying to downplay it, but we also have a global SPR release, strategic petroleum release, where we're adding barrels that have been sitting in storage for a long time to the system. There's been a lot of demand destruction for good reason. Anyone that's shopped around for plane tickets or has filled up their car knows it's a lot more expensive to travel by air, land, or sea because of fuel prices. So the demand is a lot less than it was suddenly. But the point of this chart is to kind of just reiterate that what goes on in oil is temporary, not permanent. And it's always been true, and maybe one day this will not be true, but it's always been true that is when everybody becomes bullish in oil, the rally's pretty close to being done. When everyone becomes bearish in oil, the sell-off's just about complete. And we can see this in 2008, everybody thought we were running out of oil. It was called peak oil. That was over here. And literally 4 months later, oil went from $150 a barrel to $30 a barrel. During the financial crisis, the global economy was in dire straits, and everybody assumed crude oil would, be lower for longer. Crude can't possibly go up when the world's in a recession. And as a matter of fact, just when everybody bought onto that narrative, we reversed and went higher. So I'm just trying to point out that narratives and stories and all these convincing fundamental events are temporary, and it's today's reality, but it might not be the reality in a month from now or 2 months from now. So when we look at this chart, we see there's a pretty good chance that somewhere around 120 to 126 is probably going to be about all we see for oil. There is one scenario. Let me show it to you. There's one scenario in which crude oil makes one more dramatic new high, and that is if we are repeating the 2020 cycle, not the 2022 cycle. So in 2022, crude oil, I'll point to it here. In 2022, crude oil rallied when Russia invaded Ukraine, and there was a bit of a double top. You can see the initial spike, and then it came down quite a bit. These are big moves. They don't seem that big because this is a long-term chart, but this is from 130 to 92. So it corrected $40 in a couple of weeks and then went back up and almost retested the high, but not quite. It was a lower high. If we're repeating 2020, we've probably seen the highs in oil. See, we had this big spike up. It happened a little faster. This one happened, and these are monthly bars. This one happened in 3 months. The current situation is happening in 1 month. You can see only 2 bars here. But we spiked up to 120. The next high was about 117-ish. If we're following the 2022 pattern here, we've seen the highs in oil, and we should come all the way back down. I'm not going to say 15, but I do think 15 is possible. I don't think it's impossible. But let's just say 40, 50. We could probably at least get back to where we were in January, and that seems like forever ago. Again, I know most people are calling for 180, 190, much, much higher, but that's just not the reality that I see. Of course, I could be wrong, but history suggests that this is how this could play out. In 2020, we had a big fracking sell-off. The market rallied 62%. You can see I have this box here. And then 4 years later, we made a new low. And this low actually went much lower. That's what I'm talking about when I say we might be reversing 2020. I'm thinking this big rally has retraced 62%. And if we make one more new high, it could come somewhere in the 140, 150 area up here. I don't think that's going to be sustainable. I don't think that means it's bullish market. I think that's just a silly thing that markets do. They squeeze people out, they cause a lot of pain, and then they come the other way, just like we saw here, just like we saw here. So if you are somebody that's bullish oil and you're long oil, you probably want to be making sure you take profits on rallies. If you're a bear, I think selling rallies is the way to go, but the rallies can be quite large. So you want to be very, very careful.
All right. Can you hear me?
I'm going to mute myself for just a second. I will be right back in about 20 seconds. Okay. Thank you.
Okay. I wanted to ask, because it seems like the charts here, the markets are cyclical in nature. I had to wait for the article here. But on the chart, there's like a historical repetition of where the price is up and down. All right. So on the chart, there was a
Okay, I'm back. I apologize. Sometimes being a broker is a never-ending job. Okay. So to summarize, despite all the bullish headlines we have, the odds are crude oil is probably not a market to be aggressively long. It's probably a market to be selling rips as opposed to buying dips.
Okay, and I have a the market is to be cyclical and historical. So we see it coming back to similar position at 130. Is that something seasonal?
Yeah. So seasonality in oil is bearish, right? So there's a couple of seasonalities to be aware of in oil, and this is a shorter term chart. This is a daily chart, so I'm going to go over this real quick as well to kind of go along with the longer term analysis. Crude oil generally misbehaves around this time of year. Like from February to April, crude oil has a very strong tendency to misbehave. And sometimes that means sharp rallies like we saw in 2022. Sometimes it means sharp sell-offs like we saw in 2020. But the reality is, for some reason, the market gets volatile during that time period, and there tends to be liquidity issues, and that we see it more often during that time than any other time. But generally speaking, once that volatility passes, we get trend reversals during this time of year. So seasonality is actually bearish from about March, April through midsummer, roughly. So if our assumption is correct and crude oil is a sell the rallies type of market, and I think you can see we held this moving average. I think we come up and retest 120. As I already said, maybe that gets a little out of hand and we go a little bit higher. But even so, seasonality and volatility cycles and the chart suggests that those are going to be sells, not buys. Like in the big picture, I see crude oil reverting back to the 70s, which is kind of where this market broke out from. You can see we were behaving pretty well up until we weren't, until the war broke out. And at minimum, I think on the downside, I don't want to say minimum, that's not the right word, but I think 50s are very, very doable. I actually think at minimum, on the downside, we could even go lower, but we'll have to just take it day by day. This is a very volatile market. Headlines move constantly. And it's kind of interesting to talk about these moves. I mean, oil right now is trading at 95. Yesterday's low was 86. $10 is a really big move in oil. And here I am talking about the possibility of a retest of this line here. You can see we've come up and tested it. That'd be about 120. And that's really extraordinary from 95 to 120. And if it happens in the time frame I think it will, we're talking like a week or two, that's really insane. It's just insanity. Normally oil moves like this. You can see I've been trading for a long time, and there's been years where oil doesn't move more than $10 or $20 an entire year. And yet here we are. So it's just kind of a weird time for oil.
All right. Maybe you can check maybe you can check that section code.
I'm sorry, I'm having a hard time understanding because of your do you want to look at gold?
You can check questions on the chat section due to the echo.
Okay, yep. Okay, I gotcha. So that sounds like a good idea. Okay, yes. Thank you for mentioning the RSI. That's important. So at the bottom, I have RSI. It's Relative Strength Index. And what this does is it tells me two things. Is the market overbought? Is it oversold? Is it neither? But it also tells me what the momentum looks like. And you can see as oil futures are making higher highs, see how we had this big spike here? And then we made a slightly new high here. You can see the RSI is not following the futures price. As oil prices are going higher and spiking higher, the RSI is actually making lower highs. That's a bearish setup. Now, that doesn't mean we can't run up and make one more rally, but it means, in my eyes, more often than not, it means this rally is going to be eventually sometime unsustainable. And you can see that just here in the RSI. If the RSI was making sharper highs as the market was making highs, that would be considered bullish, even though you're overbought. The momentum is there to carry it. But I just don't think the momentum is to the upside. I think any rally we get is kind of a short squeeze or a news surprise, but I think eventually we'll just kind of run out of buyers. Okay, yeah, somebody's asking about, well, I guess it's Sylvia. The difference between Brent and WTI. So Brent is basically the benchmark for oil in most parts of the country. Europe uses Brent oil. It's traded on a different exchange. It's traded on the ICE exchange. The contract months are a little bit different than WTI, so that causes some confusion. Normally, Brent is priced higher than WTI. But here in the last couple of weeks, we've seen some discrepancies between that. And a lot of that has to do with the fact that Brent futures are actually cash settled, not deliverable. So like if you buy a WTI future and you have the correct licensing and infrastructure and that sort of thing, you could technically take delivery of the oil, the underlying oil, 1,000 barrels. But if you bought a Brent future, you would actually just get cash adjusted. And that matters in this environment because there's a shortage of oil because all this oil is caught up in the Strait of Hormuz. So if somebody wants to take delivery of oil, it might be beneficial or easier to get it from the NYMEX exchange trading WTI futures than it would trying to get it from actual barrels out of the Hormuz. So that's the primary difference. And you can see if you're on Twitter or any of the social media sites, you've probably seen a lot of the boat maps. A lot of the tankers have started, instead of going to the Strait of Hormuz to pick up loads, they're going to the Gulf of Mexico or the Gulf of America, whatever you want to call it, in the US to pick up oil. So it's kind of shifted the world's mindset from getting the Brent crude oil that's a little thicker and dirtier from the Middle East and getting it from America instead. So it's definitely changing things on the global landscape. And yeah, let's take a look at a Bitcoin chart. I'm gonna show you one thing first with Bitcoin and the S&P. Here we go. I personally don't do a lot of Bitcoin analysis. I don't really give my clients recommendations on Bitcoin. We do have clients that trade it. But the reason I follow it is it's a pretty accurate barometer of risk. And what I mean by that is when people feel like they're flush with cash, when people have a little extra money and they want to speculate, or maybe they think they're investing, I don't know, but if they want to put money to work in risk assets, one of the first places it goes in is to crypto and Bitcoin. And you can see the kind of the fervor of speculation in Bitcoin's price, which, in other words, Bitcoin generally leads the stock market higher or lower because risk takers are more inclined to take risk in crypto than they are stocks, and vice versa. So before we had the big stock market correction in 2022 that went into 2023, Bitcoin kind of told us what might happen next. Bitcoin had two really sharp rallies. These brought us up into the 70,000 area. It was a double top, and then Bitcoin sold off. And you can see right here, the green bars are the S&P, the purple is Bitcoin. The S&P didn't really start selling off until a month or so, maybe 2 months after Bitcoin had already started selling off. So when Bitcoin sold off, it drug the S&P down with it. And that's pretty common. We've seen that over and over throughout the last 15 to 20 years of Bitcoin's life. Not quite 20, but you get the idea. So what's odd about this cycle is we've had a double top in Bitcoin, but the S&P has not followed. It started to, and then now the last couple of days have been just gangbuster rally in the stock market. But if history is our guide, we can see Bitcoin's not really rallying as it should be. If there was, in fact, a lot of risk-taking momentum in the market, I would expect Bitcoin to be moving much, much higher. The fact that it's not tells me that the S&P rally might be kind of on its last leg. Maybe this is some sort of last hurrah. Let me show you what a Bitcoin chart looks like. So it's worth mentioning that the Bitcoin ETF in the US was listed right around here. So the market rallied sharply in anticipation of the Bitcoin ETF, and then it eventually broke through here above this area. And this area was roughly at the time about 76,000. So market rallied in anticipation of Bitcoin ETFs, because the reason I even mention that is ETFs kind of bring liquidity to the market. It brings speculators to the market and makes it a lot easier for people to put money into Bitcoin. If they don't have to open a Bitcoin account and do the wallet and all that kind of stuff, if they just have a very simple ETF, it's a lot easier for money to flow into that asset, and it props up prices. So thanks to the listing of the ETF, we got Bitcoin to break out here and rally into a new range. And then we broke below what was 78,000 at the time in February. And in my eyes, this line, you can see this black line here I've got drawn. It was resistance for a handful of years. And now that we're below that line, it's going to be, it was resistance for a few years. We broke above it. Now that we're back below it, it's resistance again. So it kind of just a basic fundamental rule of technical analysis. If a market breaks through a trend line or a resistance area, that area becomes support. And you can see it was supportive here on this pullback. It was supportive here. But once you break back below it, it becomes resistance. So as long as Bitcoin stays below about 78,000, move that over here, maybe 79,000 because it's an inclining. It goes up a little bit. But as long as we don't break above this line, let's call it 79,000, Bitcoin is probably going to continue being in a bear market. If that's the case, stocks are probably not going to be able to hold the gains that they've put together over the last couple of weeks. Just moving these over a little bit. Now, if I'm right and 78,000 holds and Bitcoin goes into another leg of selling, there's a trend line here at about 58,000 that might hold. It's about 50, probably more like 57,000 at this point, just to kind of give you an idea. But you get the general ballpark. These things move all the time, and so sometimes it's hard to keep up with the chart. The
Right. All right.
53,200 is a moving average. Unfortunately, I took it off the screen. I'm just going to delete that so I don't confuse people. The 200-week moving average comes in right around 53,000. So just to give you an idea. But the next trend line, which is the trend line that we tested after the double top in 2022, is this purple line. If we're repeating 2022 in Bitcoin and we retest that purple line, that's going to put us at 30,000. So does this happen? You know, we don't know. We can't tell the future, but markets generally repeat themselves over and over. And it's kind of odd that they do that, but in some ways it's not odd because markets are driven by humans and humans are creatures of habit. We just have, you know, we're all kind of wired similarly in when it comes to risk and reward and fear and greed. And so the patterns tend to repeat each other. So again, I don't trade Bitcoin, but I'm using it as a barometer. To me, this is not a bullish setup for risk taking. That tells me the stock market might be in trouble, particularly if we start seeing Bitcoin break below 58,000 and head towards 30. Because a lot of what we've seen in the economy over the last 5-6 years has been the wealth effect from Bitcoin, right? Or crypto, even you could say. There's a lot of people that made some money in crypto as the markets were rallying, and they felt a little richer. They spent a little more money, and that feeds the economy pretty nicely. But you take that wealth effect away if people, you know, they may not necessarily, they probably still have their job, still have the same income, but if their net worth is a little lower than it used to be, they don't feel like spending money as much. And so sometimes you see the wealth effect really take hold.
All right. Could we have an analysis of forex charts? And then you can tell us how we can get in touch with you.
Okay. Do you want me to take a look at gold real quick?
Yes, please.
Okay. Sorry, I'm having a hard time hearing, so I just want to make sure we're not missing anything. This is the big picture in gold. So I know people got really, really excited about being bullish gold a few months ago. I have a I think there's lots and lots of reasons to be long gold. There's lots of fundamental reasons for gold to have gone up. But I really just don't think that we can justify what happened in gold by fundamentals. I think it had nothing to do with fundamentals. I think there was a few things going on, and on all honesty, I think it was just crowdsourced trading where, you know, ideas go viral and everybody wants a little piece of it, and the market's not liquid enough to absorb that. I know people think gold is a very liquid market, but believe it or not, it's not as liquid as you might think. It just can't handle everyone in the world wanting to buy a little bit of gold all at the same time. And also there were what I believe are pump and dump schemes on the internet, very similar to GameStop. I think that's what happened to gold and silver. But even without all that, let's just look at the chart. This is a chart over the last 20 years, and you can see gold rallies have held this purple line. And each and every time they backed off and traded sideways for a long while or even much lower. These corrections don't look big because of what we just saw in this parabolic run in gold, but these are actually pretty big. So the 2011 high, I was around and trading for that, and this was at the time this was considered a parabolic run that was just unheard of, except for in the 1970s. But gold had this nice run, and we peaked out here in 2011, and we literally corrected 50% over the next several years, and we didn't get back up to that level until early 2020, I want to say. So it took 9 to 10 years for people to get their money back if they bought gold here. I think we're seeing the exact same thing. I think anybody that like long-term buy and hold gold, anyone that bought gold here and thought they were going to hang on to it for a long time, they can. If their time horizon's 20, 30 years, they're probably going to make money on gold. That's how gold works. But if their time horizon's 5 years, most likely they're going to suffer some pain. I think gold probably repeats something like this or this, where we at minimum trade sideways, but probably give back a lot of that rally, maybe somewhere into the 3000s. And it might even take us another decade to come back up and break above 5,000, believe it or not. So let me show you though a daily chart. So you can kind of see the short run. In the short run, it's hard. You don't think of gold as being parabolic because we've had these big pullbacks, but just like I just showed you, even with these pullbacks that we see here on a daily chart, the monthly chart is absurdly overbought still. And I think gold's got a pretty nice setup here. This trend line has held for the last several months until it didn't in March. But this trend line was support for a long time. Now that we've broken through its resistance, so very just kind of standard technical analysis. Either 4,900 holds, either this trend line holds and gold comes back down, or I can see a scenario where we get a little bit of a spike up towards 5,000, 5,100, which is this downtrend line, and then we sell off from here. So I know these are real big numbers and spreads. There's a big difference between 4,900 and 5,100, but unfortunately, in a market this volatile, the risk is really big, and the rewards are big too, but the risk is big. So you have to kind of play with big windows. If I'm right about gold and one of these areas holds either 49 or 51, I think we at least in the short run retest this 200-day moving average. That puts us around 4,200. And then if we break that, we're talking about probably a sustained bear market for the next several years, which is what we were just looking at on the monthly chart.
All right. So as we conclude, you can tell us if we can get in touch with you, any books you've written, and your website.
All right, perfect. Let me just. Okay. Here's my contact information. So here's our website if you're interested in learn. We have a lot of educational material on our website. It's decarleytrading.com. There's my email address if you have any questions, cgarner@decarleytrading.com. We're on all the socials. You can just type in Carley Garner or DeCarley Trading and we'll come up. But I mentioned this before we started. If you want to follow us on Substack, it's free to follow us. You're not going to get all the content for free, but you can get a lot of it for free. So if you just take a picture, scan the QR code with your phone, that'll take you to our Substack page. It's decarleytrading.substack.com. You can follow us for free, but if you do decide you want all the content, you could subscribe. It's $25 a month for that.
Oh, thank you, Carley. I will link them on the show notes.
Thank you. I appreciate it.
So goodbye.
Okay. Bye. Thank you for having me. Appreciate it.
All right. Bye-bye.